Hello and welcome. My name is Matthew Lemieux, Research Analyst with Lipper, and today I'm joined by James Swanson, who is the Chief Investment Strategist as well as Portfolio Manager for MFS Funds. Welcome, James. It's nice to have you here.
Thanks for having me.
So today, really what we're going to be highlighting is winners for the Lipper 2012 U.S. Fund Awards. And with MFS here, they actually are named award winners for 5 funds, which is a great achievement. But today, we're really going to focus on their award for their Diversified Income Fund, which won for Lipper's Mixed Asset Target Allocation Conservative Fund. So once again, congratulations.
Thank you.
What sets you apart from others?
Sure. Well, number one, it's meant to provide a smooth ride. And what do I mean by that? We have 5 asset classes, and they were picked specifically so they're not highly correlated, at least historically. And that has provided a smooth ride. And so this is geared for people who want some income and some capital appreciation. So we're trying to get the right mix. What distinguishes us from our peers is we are a fundamental sort of Graham and Dodd bond and stock picking shop. But this is a tactical asset allocation fund which also includes qualitative elements like what might be too rich, what might be too cheap at this point, understand the business cycle. And I'm the chief strategist, so I bring that to it. And lastly, that distinguishes us from our peers is we have distinct guardrails. We can't go overboard in any one asset class. And so that's kept us in line.
So you have distinct lines to stay within.
Absolutely.
So with that strategy and when you're looking at individual securities, do you really consider yourself a bottom-up or a kind of a top-down investor?
Definitely bottoms up. And by that I mean, what are we looking for? We're looking for companies that got lasting products, defensible strategies in whatever it is they sell, whether it could be iron or it could be services. And then what are their balance sheets like? What's their return on invested capital? The basics of going back to long-term stock picking. We try to be long-term holders. And then an asset allocation overlay on top of that.
Well, as a conservative fund, I think one of the big surprises for 2011, it was really the outperformance we saw kind of in the conservative sector. I mean, is that something that you continue to see, or how is that really going to affect how you manage going forward? We've seen a big complex shift kind of in the bond market and how assets are going to that direction.
You're right. It was a spectacular year for AAA, particularly U.S. Treasuries and mortgages and things like that. That's not likely to persist. That was an anomalous year. Right now, we've got the central bank of the United States kind of keeping a lid on interest rates. Probably their natural state, they would go up and bond prices would go down. I imagine since the business cycle seems to be pretty healthy at this point in the U.S., we will not have as conservative a year. I think investors will try to reach out, and that's what the Fed wants them to do, and take a little bit more risk. Not a lot, but I think we're moving out the risk spectrum this year as people feel more comfortable with the business cycle.
Yeah, and it's kind of interesting how you say when people feel comfortable, because really 2011 was kind of a year that was really wrought with volatility. We've seen it kind of slow down a little bit this year. I mean, what do you see kind of in terms of volatility and how you kind of position your fund to deal with that?
Well, we have 5 different asset classes, and they've got pretty low correlations among themselves. And interestingly enough, correlations are starting to fall. So asset allocation is going to work again, I think, this year. We're noticing that. And the other thing that's going to keep us, I think, on an even keel this year is that the politicians are still kind of in control. We have an election coming up here, and the ECB isn't done with Greece and Italy. So we've got to keep in mind that you've got human decisions at very major central banks and in the offices of power around the world impinging on the market cycle. That said, I think picking good companies and countries in our bond portfolios is going to get us through a volatile period. I see less volatility this year than last.
Well, this was very informative, and we really appreciate you joining us, James. Sure. Once again, congratulations on your award winners. And for you out there, thanks for joining us as we talked about Lipper's Fund Award winners, and we hope you enjoyed it, and we hope to see you next time. Thank you.